Imagine a single invisible bottleneck. Like if one specific company's testing equipment just went offline tomorrow, the global manufacturing of the world's most popular weight loss drugs would literally grind to a halt.
Oh, absolutely. And it wouldn't just be pharma.
Right. The electric vehicle industry would struggle to verify the materials in their next generation batteries. And thousands of hospitals would suddenly be flying blind when trying to identify life-threatening blood infections.
Yeah, the ripple effects would be massive.
Today, we are embarking on a brand new deep dive to decode the first quarter 2026 financial and operational performance of that exact invisible bottleneck. I'm talking about Waters Corporation.
Right, and they trade on the New York Stock Exchange under the ticker WAT.
Exactly. So welcome to the deep dive, everyone. Our mission today is to figure out if this company's massive recent moves are actually paying off.
It's a really fascinating company to unpack. I mean, primarily because they operate at the very foundation of modern science and manufacturing.
They really do.
Yeah, and the sources we are diving into today, which include a highly detailed Q1 earnings call presentation and a really comprehensive press release from May 5, 2026.
Yeah.
They really highlight how critical their hardware and chemistry solutions are to the broader economy.
And I have to admit, gathering these specific sources felt like a minor covert op.
Oh, really?
How? Yeah, I literally had to pass this intense Cloudflare security verification on MarketBeat just to prove I wasn't a malicious bot scraping their data.
Well, they take that financial data seriously.
They do. So rest assured to everyone listening, we are human beings ready to analyze some seriously heavy numbers.
Good to know.
But to set the stage here, Q1 2026 isn't just a standard 3-month check-in for Waters. This is a massive structural milestone.
Right, because of the acquisition.
Exactly. It's the very first reporting period since they closed their blockbuster acquisition of Becton, Dickinson and Company's biosciences and diagnostic solutions business.
Which is a mouthful, so we'll probably just refer to that as BD from here on out.
Yeah, BD is much easier. And that deal closed on February 9, 2026. So the overarching question we are really trying to answer today is, did swallowing a massive chunk of another company actually work out for them?
That is the defining question for their management team right now. And, to answer it, we have to look directly at the raw scorecard.
The financials?
Exactly. I mean, integrating thousands of new employees, entirely new product lines, distinct corporate cultures, doing all of that in the middle of a financial quarter is notoriously difficult.
Oh, I can only imagine.
So the top-line numbers give us our first clue as to how well they navigated that friction.
Well, looking at these headline stats, the top-line numbers don't just look good, they look staggering.
They really do.
Total reported revenue for the quarter was $1.267 billion.
Which is huge.
Yeah, that came in $56 million above the high end of their own guidance range.
Wow.
And if you zoom in on those newly acquired BD businesses, they pulled in $520 million, completely crushing their internal target by $40 million.
Beating the high end of your own guidance during an acquisition quarter is, well, it's incredibly rare.
Right.
It suggests that not only did the legacy business hold its ground, but the sales teams for the newly acquired products didn't skip a beat during the transition.
Okay, let's unpack this, though, because I hear that, but I'm looking at the bottom line in this press release, and my immediate instinct is that they are hiding a rough reality behind some aggressive accounting tricks.
Okay, what makes you say that?
Well, when you look at their adjusted earnings per share, the EPS, it grew an impressive 20% to $2.70. But if you look at the GAAP EPS, the generally accepted accounting principles number that companies are legally required to report, it actually shows a loss of $0.87 per share.
Ah, right, the GAAP loss.
Wait, they lost 87 cents a share on paper, but they are parading around a $2.70 adjusted profit. Sounds like financial magic. What is actually going on here? Is the core business bleeding cash?
No, it's not bleeding cash. It is entirely standard for a deal of this magnitude, and it really comes down to the strict mechanics of purchase accounting.
Okay, so how does that work?
Well, when Waters bought the BD businesses, they didn't just inherit a revenue stream. Accounting rules forced them to fundamentally revalue the assets they just purchased.
Right.
So the GAAP loss is heavily skewed by a $140 million charge for the amortization of acquired intangibles.
So basically, writing down the value of abstract things over time, like patents, proprietary software, or brand recognition.
Precisely. You have to amortize those. But the more disruptive hit to the GAAP number is a $99 million charge for inventory and fixed asset step-up costs.
Step-up costs. What does that mean in plain English?
So to understand how this works, imagine you buy a fully stocked retail store.
Okay, I'm with you.
The jeans on the shelf cost the previous owner, say, $10 to manufacture. But accounting rules force you, the new owner, to value those jeans on your books at their $50 fair market retail value the moment you buy the store.
Wait, really? Even before I sell them?
Exactly. So when you eventually sell those jeans to a customer for $50, your paper profit on that specific item is zero.
Oh, wow. Even though cash just entered the register.
Yes. Waters had to step up the value of the BD inventory they acquired. As they sell through that initial batch of acquired inventory, it temporarily crushes their GAAP profit margin.
I see. So it's a one-time accounting shock.
Exactly. It's paper noise.
That makes perfect sense. The cash is still flowing in, but the profit margin on that specific batch of inventory is artificially suppressed by the rules of the buyout.
You nailed it. And the proof that this is just noise lies in the organic revenue.
The numbers without the acquisition factored in.
Right. If you strip away the new BD stuff entirely and just look at the core business Waters was already running, organic revenue grew 13% as reported.
Which is very strong.
And when you factor in constant currency, which strips out the chaotic fluctuations of global exchange rates to show you actual volume, it grew 11% to $747 million.
Okay, that tells us the underlying engine is highly functional and generating real cash. So if the core engine is generating that kind of organic growth, who exactly is writing the checks? We need to look at what specific divisions are selling to bring in $1 billion in 3 months.
We do.
If we look at the analytical sciences division, or ASD, they pulled in $607 million, up 14% as reported. And the presentation explicitly ties this growth to the ramping up of GLP-1 manufacturing volume. I mean, selling to pharma right now is like selling shovels during a gold rush. Every pharmaceutical company on earth wants a piece of the weight loss drug market right now, and they are buying massive amounts of Waters equipment to do it.
Yeah, and we really need to understand why that equipment is so non-negotiable for pharma companies.
Why is that?
Well, GLP-1s are biologically complex peptides. They aren't simple chemical compounds like aspirin. Manufacturing them at a global scale requires an intense, rigorous testing infrastructure.
So it's like Waters is providing the structural spell check for human biology.
That is the perfect way to frame it.
Because when you are manufacturing millions of doses of a complex peptide, even a microscopic variation in the chemical code could cause massive side effects. Pharmaceutical companies are legally required to prove every single batch is identical.
Exactly. And Waters sells the quality control instruments that prove it. The liability is just too high to use outdated testing methods.
That makes total sense.
Now, if we pivot to the newly acquired assets, specifically the biosciences division, or WBD, they brought in $232 million during the owned period of the quarter.
Okay, nice chunk of change.
It is, but there is a fascinating nuance here. Their sales of chemical reagents grew in the low double digits, while their instrument sales actually faced significant pressure.
Wait, I don't get that. If the division is healthy and the chemical reagents are flying off the shelves, why would the physical instruments you need to run those reagents be struggling?
Because they operate on entirely different purchasing life cycles.
Oh, like a razor and blades model.
Sort of, yeah. Reagents are recurring consumables. A busy lab burns through them every single day and has to constantly restock just to keep the lights on.
Right.
Instruments, however, are massive capital expenditures. They cost hundreds of thousands of dollars. The sources point out that instrument sales are struggling due to ongoing macroeconomic constraints in China, combined with weak spending trends in U.S. academic and government sectors.
So when interest rates are high or government budgets tighten, labs delay buying the new $500,000 machine.
Exactly. But they still have to buy the daily chemicals for the machines they already own.
So the recurring revenue acts as a buffer against a tough macroeconomic climate.
Precisely.
Even so, the presentation notes solid underlying demand for their new instrument systems, specifically the FACS Discover A8 and S8. So the appetite for the new tech is clearly there, even if the purchasing departments are moving slowly.
Yeah, it highlights how tethered this company is to broad real-world events. I mean, look at the Advanced Diagnostics Division, ADX. They brought in $349 million, with microbiology alone up 10%. But respiratory testing sales actually faced headwinds.
Because of a weak flu season. I saw that in the notes.
Yes.
It's wild to think that a relatively mild winter for the general population translates directly into an immediate dip in sales for a multi-billion-dollar life sciences company. It just proves how directly these financial metrics reflect public health trends.
It really does.
And rounding out the divisions, the Material Sciences Division, MSD, brought in $79 million. They saw soft trends in core chemicals, but that was completely offset by high growth in testing for batteries, electric vehicles, and data centers.
Material testing is truly the unsung hero of the tech boom.
How so?
An electric vehicle manufacturer cannot safely scale up battery production without constantly testing the thermal and chemical stability of the materials they are using. Waters provides the exact systems that verify those materials won't degrade or catch fire under stress.
But industries like EVs and advanced pharma are moving at breakneck speed. They won't keep buying your equipment if the tech itself becomes a bottleneck.
That's very true.
Here's where it gets really interesting. The presentation dedicates a massive amount of time to next-generation hardware, and we need to understand how these tools actually function. Let's look at the chemistry side first.
Okay.
They launched the next-generation microflow LC chemistry columns, the MaxPeak Premier.
Right.
The claim is that this hardware offers up to 2 times higher sensitivity while using 75% less sample.
Which is a huge leap.
Yeah, to translate that into real-world impact. In early-stage pharmaceutical R&D, scientists might only have a microscopic, incredibly expensive droplet of a newly synthesized compound. Being able to analyze it perfectly while consuming 75% less of that precious material accelerates the entire discovery timeline.
It completely removes a critical physical limitation from the lab bench.
Exactly.
The sources also highlight the Omnidon multi-angle light scattering detector.
Okay, what does that do?
It's designed to characterize large molecules.
Yep.
And it operates less than 4 times faster than previous tech, offering 10 times better absolute molar mass measurement.
Okay, hold on. Let's unpack absolute molar mass measurement. For anyone listening who hasn't taken a chemistry class in a decade, why is measuring the exact mass of a large molecule so critical? How does bouncing light off a sample actually help a scientist?
Okay, think about it like this. Imagine trying to identify the exact types of vehicles in a massive traffic jam, but you are only allowed to use a scale to weigh them.
Sounds impossible.
Right. You might know a vehicle weighs 2 tons, but you don't know if it's a sleek sports car or a dense compact tractor.
Okay, I see where you're going with this.
In biology, the shape and size of a molecule dictate how it will interact with the human body. Light scattering technology literally bounces lasers off the molecules in real time.
Lasers. Nice.
Yeah. By measuring exactly how the light scatters in multiple directions, scientists can determine not just the weight, but the physical structure and aggregation of these massive complex molecules. It is absolutely essential for developing biologic drugs.
So they're essentially giving pharmaceutical researchers a high-definition radar for microscopic structures. That level of engineering precision on the chemistry side is impressive, but how does that translate to the clinical side? What's fascinating here is what happens when this tech enters a hospital.
Right, and this is where the innovation becomes deeply consequential for individual patients. The sources detail the next-generation BACTEC FXI blood culture system.
BACTEC FXI.
Yes. It features advanced automation with 60 sample loading, which is great for lab efficiency. But the critical metric is that it detects issues approximately 3 hours faster than the current generation BACTEC system.
3 hours might sound negligible if you're waiting for, like, an email response.
Right.
But in an intensive care unit, 3 hours is an eternity.
It is the defining window. When a doctor orders a blood culture, they usually suspect the patient has sepsis, which is a severe, rapid systemic infection. You literally have to place the patient's blood in an incubator and wait for the bacteria to grow enough to be identified. The faster the instrument can detect and identify that specific pathogen, the faster the clinical team can transition the patient from broad-spectrum guesswork antibiotics to the exact targeted drug that will kill the infection.
Wow.
In the sepsis cascade, shaving 3 hours off that detection time fundamentally alters the survival rate.
That really shifts the conversation from corporate revenue directly to human survival.
It does.
And it perfectly sets up another major clinical milestone they highlighted, the OnClarity HPV self-collection kit. The presentation notes it received FDA clearance for at-home use, making it the most comprehensive screening tool for human papillomavirus available in the U.S.
Yes, that was a huge announcement.
But I want to scrutinize this for a second. Is an at-home collection kit just catering to modern convenience? Like, are we just treating medical diagnostics like a food delivery app? Or is this solving a deeper medical issue?
Oh, it directly targets a massive structural failure in our healthcare system. The sources provide a really sobering statistic. Unscreened or underscreened individuals make up approximately 60% of all cervical cancer cases.
60%. That's huge.
Yeah. The primary barrier to reducing cervical cancer isn't that the clinical tests don't work, it's that people just aren't getting them. The barriers are geographical distance to a clinic, lack of a primary care physician, inability to take time off work, and profound clinical anxiety.
Right. That makes a lot of sense.
By providing an FDA-cleared, highly accurate kit that a patient can use in the privacy of their own home, Waters is bypassing all those systemic roadblocks. It allows them to reach the exact demographic most vulnerable to the disease.
It's a perfect example of how a shift in delivery mechanism moving from the clinic to the living room can be just as innovative as the chemical test itself. But having groundbreaking tech and successfully closing a massive merger on paper is really only half the battle. Merging massive companies is notoriously messy in practice. IT systems crash, sales cultures clash, supply chains get tangled.
It's usually a nightmare.
Exactly. And CEO Dr. Udit Batra outlined a 180-day plan to drive urgency, accountability, and transparency. I have to push back on this a bit. Synergy is a classic Wall Street buzzword. What does their goal of $200 million in cost synergy by year 3 actually look like on the ground?
It is a tired buzzword, I'll give you that.
Yeah.
But in this specific presentation, they break down exactly where the friction is being eliminated to find that money.
Okay, let's hear the breakdown.
So out of the $200 million goal, $80 million is coming directly from manufacturing and supply chain. This means untangling competing logistics networks. If legacy Waters and newly acquired BD both operate massive, half-empty distribution centers in the same European region, you close one, migrate the inventory, and immediately drop the overhead costs.
So just ruthless physical consolidation.
Yes. Then you have $75 million coming from commercial and service operations. This involves centralizing the digital infrastructure like moving everyone onto a single enterprise resource planning software and eliminating redundant layers of middle management that naturally overlap when two massive corporate charts collide.
Right, that always happens in mergers.
Yeah. And finally, $45 million comes from R&D and general and administrative costs. That largely means indirect procurement. Because the combined entity now buys dramatically more raw materials, they have the leverage to renegotiate much better rates with their global suppliers.
And what stands out to me is that it's not just about defensive cost cutting. The sources emphasize they are already on track for over $50 million in revenue synergies in 2026 alone.
Which is very aggressive.
Yeah, they are actively generating new cash they wouldn't have seen if the companies had stayed separate. For example, they are already cross-selling Waters' high-end mass spectrometers directly through the BD Biosciences sales channels.
That's a huge advantage.
And they also use their combined engineering resources to accelerate the launch of that life-saving BACTEC FXI system by 3 to 5 months. I mean, they are proving that the integration isn't slowing them down, it's speeding them up.
And you know, the financial markets reward that exact kind of operational discipline. Because they are hitting these complex integration targets ahead of schedule, and because the core organic business is incredibly healthy, management took the rare step of raising their full-year guidance in the middle of a massive transition.
So what does this all mean for you as the listener? If you're wondering about the trajectory of the company, the takeaway is clear. Waters Corporation didn't just survive this acquisition. They are thriving. They are using it as a massive accelerator.
Yeah, the numbers don't lie.
Because of this momentum, they officially raised their full-year 2026 organic constant currency revenue growth guidance to a range of 6.5% to 8.0%. And, crucially, they raised their adjusted EPS guidance for the year to $14.14 to $14.60. They have successfully digested the BD assets, expanded their footprint, and are projecting more profit than they were before the deal closed.
It is undeniably an operational triumph.
Mm.
But if we connect this to the bigger picture, it raises a profound question about how science itself is scaling.
What do you mean?
Well, we are witnessing a massive consolidation of the fundamental tools that measure our world. Think about what we've unpacked today.
Okay.
When a single, centralized company manufactures the instruments that test your electric vehicle's battery, verifies the chemical code of your weight loss medication, and builds the blood culture system saving lives in your local hospital. How does that level of centralized, behind-the-scenes scientific power shape the future pace of global innovation?
Wow.
When the invisible engine of global research gets this large and this efficient, it effectively dictates the speed limit of innovation for everyone else.
That is a phenomenal thought to leave on. It completely changes how you look at the physical products and the medicines we interact with every single day. There is an entire world of invisible infrastructure making it all possible. Thank you so much for joining us on this deep dive. Keep questioning the science, keep questioning the business, and we'll catch you on the next one.